Hey everyone, welcome back. Today I'm going to bring you the best stocks to buy now for November. The stocks will all have a technology component so you can potentially 5 to 10x your money down the road, and you should do well regardless of the election. These are the kind of stocks that we need to make sure that we're paying attention to. So stick around, see what they are, and I think you're gonna like what I have for you. What's happening, guys? I'm Henry, and if you're new, I work at Goldman Sachs and on the New York Stock Exchange. I primarily do options trading for a living, but I'm here to bring you the best information so you can become a better investor. I have 3 growing technology stocks, but before I tell you them, I'm gonna ask you for a favor. Hit the subscribe button, become part of the family here, and make sure you also hit the bell notification. These 3 stocks have killed it in returns and present big opportunities, so you're gonna wanna see them because, well, they're likely to keep making money. All 3 are killer stocks, but I saved the best for last. I'm also launching Weekly Option Income Academy in a few days, so make sure you sign up if you want to be notified when it launches for a first day bonus. It's launching November 1st at 11 a.m. Eastern. It's going to show the patterns and techniques that I use to make weekly income, and the purpose is to take a complete beginner investor up to an intermediate options income seller in just a few weeks. I've had some really big personal gains this year, and I want to help others by doing the same, so I share my personal portfolio and results in options trading. If you're interested, there's a link below where I'm able to grab your email and send you guys emails with updates about options and other content. Plus, you can always respond to me and ask me questions. So moving on from here, let's get into our first stock. When it comes to trying to get 10 times your money, you need high growth stocks. You're not going to be able to buy a stock, say something like Bank of America, and watch it go up 10 times in just a few years. I mean, you really need to take some risks to get a 10x return on your money. So when I talk about the best stocks to buy now and the best high growth stocks to buy now, you're gonna need to pick something that has a very high growth rate. You also need a company that is in a market that is seeing explosive growth in revenue and market size. The tech field gives us the highest likelihood to find a 10 bagger because software revenues have high margins and they can scale exponentially fast. So the first one is NVDA. This is one that I have and I own in the ArcH portfolio on Patreon, and I also want to add this one to my personal portfolio. I don't mind owning this stock in all my portfolios for that matter because I really like this over the years, but I kept trying to pick a cheaper and cheaper price. I was wondering what's the best entry price, and unfortunately I missed the stock back when it was $70 per share. I was still a finance student back when it was $70 per share, so I didn't really know what a good entry price was, but basically now that I understand, under $100 was a complete steal because now we're 5 times higher on the stock and it's over $500 per share. That's totally okay. I'm about to tell you exactly why that's okay right now. The current PE obviously is a little high, and that's why you need to be wary. However, it's just under 100 on TD Ameritrade with a market cap of $324 billion. Taking a look at 2017, 2018 earnings, they ended with $4.82 overall. And now, 4 years later, the end of 2021, the stock's earnings will double. According to TD Ameritrade, the estimates for the following year's earnings can be up to $11 per share. The next image, if we look at the price performance since 2015, is very striking. Obviously, it's hard to time the market, but you can see here that from a bottom point of $24 to almost $600, that's about 25 times return, or $10,000 would be about $250,000 had you invested from the low to the very peak. Again, looking at the financial statements, we see the balance sheet filling up with cash, slight bump on the total revenues, but a strong trend. And my favorite pattern for NVIDIA, the cash flow is amazing. Look at that 4x in cash flow from 2016 to 2020. Wall Street loves cash flow. That's what all the analysts, myself included, when I used to work there, were looking at almost all of the time because it's such an important driver when you're creating a financial model. But I'm looking at it like this: will the company continue to perform? And for me, I think this chip company is going to deliver the goods going forward. NVIDIA is well known for its graphic processing units, or GPUs, that are used for virtually everything from high-end gaming to artificial intelligence. NVIDIA leads the discrete graphics market with an 80% market share, and that massive lead will help keep the company ahead of its competitors for years to come. The bad news is its customer Tesla, and by the way, Tesla's not part of this video, but I'm wearing an awesome Tesla shirt, went its own way and it actually left NVIDIA. But that's not really surprising since Tesla is scaling their own business so hard and they want to own their whole supply chain themselves. They don't want to have third parties that they rely on. Wall Street analysts have this stock as a buy with an average price target of $571 per share. And the question is, how will NVIDIA have a 10x potential reward from here on out? Well, the company recently agreed to buy ARM Holdings for $40 billion. And once the deal closes, which is expected to happen in the next 18 months, NVIDIA will enter the massive smartphone chip market. ARM's licensing and chip design are found in 90% of the smartphones, And the new market will help NVIDIA diversify its revenues even more than it's diversified now. Not only will they diversify, but the smartphone chip market is a $20 billion market per year, so that industry is going to help NVIDIA fuel its earnings potential going forward. NVIDIA's current market position in discrete GPUs, its expanding data center revenue, and its purchase of ARM holdings all make this company a compelling tech stock that should be well worth the investment for many years to come. Last mention, I do like to see this institutional holdings for NVIDIA is over 68%. I love seeing this because that helps keep this stock very safe, since that's your Vanguards, that's your BlackRocks, that's your Bank of Americas of the world holding this stock, and that makes it very safe. It makes me feel a lot more comfortable because I see big money is playing with this stock, and that's actually a good thing for the stock long term. Okay, let's talk about the next stock, and this is an ARK Invest Cathie Wood special. It's Square. Cathie Woods actually has this stock as a large holdings, and just checking out the value in her main ARKKK fund, it has a tremendous amount of value, as you can see on the screen right here. Much like NVIDIA, I love this one. When you're talking about getting a stock that can go up and give you 10 times your money in a few years, this is the kind of stock that I like in the financial sector that is disrupting banks, and they're actually a technology company slash finance company, so I'll just call them a fintech company. So this financial technology company, let me ask you this, what prints more money than a bank? A fin bank or a financial technology company? That was just so bad. That was not funny, Henry. Anyways, these are the kind of stocks that we're looking at right now because, like I said, when you're trying to get a massive amount of gains in a very short amount of time, you have to pick companies that are doing massive things with their revenues and they're in sectors that are growing very fast. Like I said, you're not gonna watch Bank of America go out there and triple their income or triple their stock price in just a year. That's not really gonna happen for a really big bank. But that could happen for Square because they're involved in so many different industries that are benefiting tremendously right now. I mean, just look at the 6-month chart. It looks stupid in a good way, by the way. It was $75 6 months ago, and then 6 months later, slap on a $100 bill and you got a $175 stock. It's no surprise I'm pitching this stock as a good long-term 10-bagger because Square has gone up a tremendous amount. With Square, they have that opportunity. They are growing, and everyone knows that Cash App, which is its fastest growing mobile payment service, is doing really well right now too. But once again, like NVIDIA, but even more so, the PE on Square is $391 on TD Ameritrade. The reason it's high, and basically a bunch of these tech stocks on the market are really high because interest rates are low, there is nowhere to park your cash, and they are growing at above average rates. Now, this is a very high growth stock, one of the best high growth stocks out there, or else it wouldn't actually catch the attention of Cathie Woods and her team. Square's original appeal was that it allowed small and medium business owners to create makeshift payment processing on the fly right there on the spot. Thanks to the company's hardware and accompanying software, and any electronic device could be turned basically into a point of sale solution system. But Square offered much more than just the point of sale system. The company also allowed business owners to focus on their operations by taking care of such services as inventory, payroll, loans, and many more services. That part of the business is suffering right now due to COVID, but Square does have two shining stars that I want to mention right now. As I mentioned, Cash App, the company's person-to-person or P2P payment app, Cash App should be a key growth driver over the next decade, and I mean, this thing is really killing it. I mean, I know a bunch of people use Venmo, but Cash App is growing like gangbusters. The app had more than 30 million active users and customers, up from 24 million in December 2019. The second shining star, and it's funny because I never invested in Bitcoin and I never plan to in the foreseeable future, but Square is. Bitcoin-related revenue for the digital payment really pushed Square's revenues. In fact, Square surged 600% year over year to $875 million in Q2 as COVID impacted the economy. However, the firm's overall Q2 revenue rose 64% year over year, still not too bad, to $1.92 billion, beating expectations by a whole lot. Square says it only applies a small margin to market cost of Bitcoin, so as a form of percent fees, I like what they're doing there with Bitcoin, and I have no problem with them taking little fees on their Bitcoin transactions. Square knows what they're doing. Here's some growth rates. EPS growth, TTM, stands for trailing 12 months. It's 437%. Just imagine that happening a few more times and we're looking at a really big stock. I'm not saying overnight, but look, even if the stock goes up 200% in the next 12 months, that could be a formula to potentially 2 or 3x your money in this stock in the next 12 to 24 months because investors will notice the huge opportunity. So Square is at $170 right now, and if things go really well, the stock will triple and the stock can potentially hit $500 per share. That's because the growth that Square is experiencing, that doesn't really go unnoticed by investors. Now, the last stock is up a lot. I mean, completely exploded because this company did something that it has never done before. In fact, there's a good chance you use it or maybe your kids use it. Does this look familiar? Yep, I hate it too, but it makes a lot of money. We're talking about Snapchat. Yep, I hate that too when a bunch of people are on their phones, they don't even pay attention to you. You go out and they're on their phones, or you stay in and people are on their phones all day. Either way, we're talking about Snapchat and they're making a lot of money. I actually got very excited for this part of the video and my research in making this video because I sat down and asked myself, what part of our economy or trend or just company for that matter is underrated? It could potentially be a GOAT in the next several years. And I also tried to think what company could benefit from COVID. Then I started Googling top advertising companies since everyone just sits home on the internet and basically just, either has fun or works from home on the internet. And then it dawned on me, this company has literally all the components to 10x your money. Dating is super hard right now. Nobody's getting the fun they used to, but Snapchat, yeah, I bet people are using Snap more than ever for what it was first designed for in the first place. Sure, it's not as good as TikTok, but that's not a public stock that we can invest in. So let's dive into Snapchat and what they just reported, which completely skyrocketed the stock. This metric for the first time, by the way, changed since Snapchat went IPO back in 2017. Are you wondering what that metric is? Well, none other than what you're about to see right now.
Here in my garage, just bought this new Lamborghini here. It's fun to drive up here in the Hollywood Hills. But you know what I like a lot more than materialistic things? Knowledge.
Sorry, I just had to put Ty Lopez here in my garage. That was a very famous ad that he spent millions of dollars on. And yes, the answer is it's ads. Snapchat for the very first time in the third quarter increased its average ad price by 20% year over year. Literally the first time ever since they went IPO. It's been 3 years and this company finally woke up amid the pandemic. I guess all the fun data that they collect has been fruitful enough for them to make some good money on. That's funny, silly people. It must be some valuable data though, because advertisers said, hey, I want to run some commercials on this platform. It seems really fruitful. On a more serious note though, Snap saw improvements in 3 key areas that all contributed to higher average price per ad impression. That's the money that advertisers pay per person that sees the ad, and these 3 metrics totally change the way I view Snapchat right now. First, Snap saw a positive shift in ad impressions to higher value ad products like its 6-second commercials. Commercials displayed during Snap's show and Discover, which continued to grow in popularity, was a big contributor. Total time spent watching shows increased 50% year over year last quarter, and revenue from commercials more than doubled year over year as well. Spend on the augmented reality advertising products also more than doubled year over year, so there's a whole lot of things that doubled year over year. Management called its ability to advertise to maximize reach and frequency with these ad products, and Snapchat users spend a lot of time with lenses. Second, Snap experienced an increase in demand from both new and existing advertisers. Snap saw particularly strong demand with brand advertisers who are more likely to purchase those higher value ad products like commercials and sponsored lenses. It also wasn't bad at all that Facebook had boycotts early in the quarter from dozens of large brands. This makes me wonder though, some of those brands may like Snapchat more or see a bigger ROI since it's cheaper to advertise on Snap than Facebook per impression. In fact, 1,000 impressions on Facebook costs roughly $5.12, while on Snapchat the same impressions cost $2.95. Finally, Snap has made continued improvements in its measurement and targeting capabilities. The ability to surface the right ad in front of the right person at the right time makes it that much more effective and that much more valuable to a marketer. Improving this technology is a big step forward, increasing the price advertisers pay per impression, and Snap is getting a lot better at this. Now, let's jump into the financials. The market cap is $61 billion. So the chart looks ridiculous. The volume, as you can see, has been 5 times the normal volume. It usually is around 30 million in trading volume, and it's recently started to average in the past week about 130 million. That means a lot of shares are changing hands, and this stock caught the attention of hedge funds Wall Street, and possibly a lot of investors on Robinhood. I think a lot of analysts are going to keep upgrading this stock, and if ad rates keep increasing or the number of advertisers increase on the platform, or both, that's going to be a recipe for this stock launching past a $100 billion valuation. I'd love to talk to you guys more on Patreon, where I answer direct questions, or join Discord if you want a community to chat stocks or investing with. All of that is in my description links below. Hope you guys take advantage of these best stocks in November. Let's get stupid rich, but do it smartly and safely. Thank you so much for watching. I want my YouTube family of 50,000 people strong to be aggressive in learning, but be safe in investing. Give me that fist bump.